The Fed, the Federal Reserve officials are up to many of their old tricks here, essentially, okay? And I want to take you guys through what happened here today, and this was very impactful. The Fed, Jerome Powell, and other officials basically gave a massive warning to all stock market investors out there. They gave a massive warning to corporations as well. And the thing I think is most interesting, I want to take you through what they said, but the thing I think is most interesting is the reaction. Because the reaction we've gotten in the market is a very different reaction than what we've been getting in the past, which means there's something shifting here. And I want to show you guys that, and I want to take you through that in this video so I can kind of explain that, because I think it's a very important subject that we must discuss. And we'll also talk about other stocks and other things going on in the market in this video. As always, I hope you guys enjoyed. I appreciate everybody that subscribed to the channel. Thank you for always joining me. And also, if you didn't hear, I launched a Patreon yesterday. So those of you that want to support the channel can do that. And also you get access to see all the stocks I buy every single Friday in the new Patreon portfolio, essentially, because I'm going to buy stocks every single Friday. So any buys or sells, you're going to be able to actually see that being a Patreon member there. And that will be pinned comment if you're interested. But I wanted to take a screenshot of whoever was supporter number 50, and I don't know if it was Charles or it was Chase, but thank you, obviously, to everybody that's supporting the channel and the content on Patreon. And I also want to give a shout out to Annie, who's the first member who is from Mexico. So I just got back from Mexico. I appreciate it. By the way, Mexico, if you ever go to Mexico, make sure you don't go to the airport. It's important, because I know a lot of you guys are going to go to Mexico in the future. Whenever you go to Mexico in the future, okay, don't exchange money, because you're obviously going to want to exchange American money, or if you're from Europe, you want to change whatever your currency is, right, to pesos. Don't do it at the airport. You can do it other places for a far better price. The airport is the biggest rip off as far as that goes. Like, for instance, when we went, we cashed in at least a few $100s of American money, right, and essentially we got like 17 pesos for every $1. What we should have been getting is likely 21 or 22 pesos for every dollar, essentially, okay? But you got to learn every time you go anywhere. When people come to my city that I'm usually live in, this is my other house in Arizona, Vegas is full of those type of things that you can obviously once you've been to Vegas once, you're like, oh, don't fall for that, right? And we definitely fell for that at the airport, going to the bank that was at the airport, and I was like, oh my gosh, that we got literally the worst exchange you could possibly get out there. So anyways, I appreciate it. Long story short, I just wanted to give everybody that info, because I'm sure at some point in your life you might go to Mexico, and maybe you've been there before, okay? So, but yeah, I appreciate everybody joining on Patreon and supporting the channel. If you're looking to do that, that will be pinned comment down there. Alrighty, guys, so first off, obviously, top headline all over CNBC today. Powell says the Fed might have to make unpopular decisions to stabilize prices. Look at this. This is very important. Quote, price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term, as we raise interest rates to slow the economy. Slow the economy is a nice way of saying putting the economy into a recession, okay? That's just a very nice way of putting that, right? The absence of direct political control over our decisions allows us to take the necessary measures without considering short-term political factors. Yes. Now, if you want to know what's the what's the more in-depth kind of what they're saying there, essentially, right? Because the Fed's going to try to always say things in I guess you say the most professional way possible. What they're basically saying is, we don't really care about the stock market. We don't really care about company earnings. We are fully prepared to not help the stock market, to not help companies, right? Which the stock market just consists of basically a bunch of companies that people invest in. And the more those companies' earnings go up over time, the more obviously those companies are worth over time, right? And so the Fed basically just gave a warning here today, Jerome Powell specifically, saying we're not coming to the rescue. We're not trying to help out the stock market. We're not trying to help out anybody right now. And we're fully prepared to take this economy into recession. They didn't say that, but that's basically what they meant. If you kind of understand, the framing of these subjects and things like that, right? They're basically saying we're fully prepared to have everybody hate us. The stock market hates us and might hate us more. Politicians might hate us because we might hurt the economy, right? And do keep in mind, if the economy gets into a really, really tough place over this next year, right? And, we're already starting to see a lot of job losses. Let's say we see more of this over 2023, right? We're going to a presidential election in 2024. I can tell you, if the economy is bad, you don't get voted back in, essentially. You will be out. And the next political party will take over as the next president in 2024, essentially, okay? Well, technically, you don't get into office until 2025, but nonetheless, the election obviously happens in 2024. And so that's why it matters in a significant way, because it can literally change who's the president of the United States depending upon how the economy goes over this next year. If the economy goes like this, the gentleman that's in the White House right now is out. That's bottom line with that. Like, you don't stay in. Like people say they believe in this, they believe in that, and they might be Democrat, they might be Republican, and all those things. But at the end of the day, you mess with people's money, it is the most important thing to people. And that's just always been that way, right? It's food on the table. Like, money is food on the table, right? It's your family being able to have a roof over their head. And so if things go bad, it always ends up falling back on the president, right? That's the way people look at it. And so that's why that matters significantly. And basically Jerome Powell saying, hey, you know what? Whatever is. Like, if people have to get voted out of office because the economy falls off the rails because of decisions maybe we're making, it is what it is. And he's like, basically, you just have to accept that, right? Next major headline down, the second one of the day. This is from 19 minutes ago. Fed's Bauman says there's a lot more work to do to bring down inflation. What does she have to say, okay? Federal Reserve Governor Michelle Bauman said Tuesday she expects more interest rate increases ahead, with higher rates to prevail for a while until inflation is subdued. Quote, I am committed to taking further actions to bring inflation back down to our goal, which is our goal. There's still a big difference between their goal and where the CPI is at right now. The central bank official said in prepared remarks in a speech in Florida today. In recent months, we've seen a decline in some measures of inflation, but this is a major part of this, a lot more work to do. So I expect the Federal Open Market Committee, FOMC, will continue raising interest rates to tighten monetary policy. That is a stance that is basically saying we're not coming to the rescue of the economy, to companies, to their earnings, to the stock market, to anything. We're not coming to the rescue of anything anytime soon. So don't be prepared for this. Now, I said in yesterday's video, a very important point I made in yesterday's video, if you watched that, okay, what was that super important point I made? I made a point that the Fed has to take this stance right now. They're trying their hardest to keep the stock market from going up, they're trying their hardest to keep financial conditions from easing. So they have to come out and constantly just say, we're going to keep raising rates. We're going to keep them there for a long time, right? They have no other choice. And all these Fed officials are basically kind of reiterating the same thing. And they have to right now because they don't want the next bull market cycle to start right now. Not right now. When inflation is down, they'll be happy to let the next bull market cycle happen. But while inflation is still way higher than their target, they don't want to let that happen. They don't want to let financial conditions ease in any way. So they constantly come out in these interviews and these remarks and this and that, and they constantly just reiterate this point of we're going to keep raising rates. We're going to keep them there for longer. We have a lot more work to do, right? And they're not trying to let this market go up in any significant way right now. That's what they want, right? Now, with what I just took you through there, Jerome Powell and another very influential person in the Fed coming out and taking that sort of stance about we're not even close to being done this game. We got a long way to go. Usually what would happen is this would send the market down huge. Stocks down huge. It'd be an awful day in the market, right? But something very interesting just transpired here essentially, okay? The markets are all green. S&P 500's up. The Russell's up. Bitcoin's up. Even super risk assets like Bitcoin, Ethereum are up, right? NASDAQ's up. Countless stocks are up. It's green out there, which is a very big shift in market sentiment and mentality that you could have Jerome Powell, the leader of the Fed, right? One of the most influential men in the world. And you could have a very influential person at the Fed come out and take that sort of stance. And the market just kind of brushes it off and says, okay, we know that. We're going up. That's a big change in sentiment that I think is very interesting, right? I mean, usually, this is a public account today, right? Public account's up $8,800 here today. Usually when the Fed, at least in 2022, when they would come out and take this sort of stance, public account would be down tens of thousands of dollars in that day, right? To see it up after Jerome Powell and the Fed person comes out, the Fed governor, Michelle there, comes out and says that, to have that account up today, very intriguing, right? Look at big tech. I mean, big tech's climbing in a significant way. Look at, most of big tech's green today. Green out there, right? Amazon making a very nice upward move. That's very intriguing to see that sort of reaction on a day like today, right? Now, I got some very important other things to show you guys that I got to keep you in the loop on here that's going on essentially, okay? This first one matters in a significant way, and this is absolutely positively great news. This is great news for everybody watching this video right now that's worried about inflation, the Fed, all these things, okay? What I'm showing you right now in front of you is essentially the commodity index, okay? So what we need to see is a commodity index continue to just kind of downtrend for the next, hopefully, few months, if not the next year, right? And that's exactly what we have. Commodities really peaked out in terms of a whole of commodities, and some commodities peaked later and some peaked before, but roughly they peaked in early summertime, okay? And ever since then, the trend has been down ultimately. And so this is great news. We need to keep this going. And there's definitely potential that this could keep going, okay? I pulled up a 5-year here of commodities. Now, keep in mind, commodities aren't like stocks. It's not like they have earnings and, suddenly their company should be worth far more, right? Commodities are a commodity, right? They're a dime a dozen. You can get it anywhere. It's a supply and demand game, right? And obviously we had issues when it comes to supply of some commodities, and we had insane demand for a while there, which obviously caused this insane super cycle of commodities that basically started in April of 2020 and went through until the beginning of the summer, right, of 2022. And ever since then, it started to be down. Now, commodities reached a bottom in terms of the commodity index of about $8. I don't know if we'll ever get back down there. That's probably unrealistic, to be quite frank. But do keep in mind, if you look at the trend prior to Rona, right, and prior to the super cycle in commodities that happened there, and this like insane blow off top, you would have thought this was Tesla, my Tesla stock. Like, holy smokers, ain't no jokers, right? This commodities index is usually between about $14 and $18. It's where we will go back to. And that's just the way this game will play out. We will go back to the normal range of where commodities should be, which is in the 14 to 18 range. This is just the way this market's working out, okay? And so there's been a lot of people, especially in early summertime, that just like, oh, this is the new market and commodities to the moon. And that's just a natural reaction to whenever things are going great, right? Whenever a stock's going great, it's just like it's only going to keep going up and it's only positive, right? And so people that were playing commodities are kind of just in this delusional state of like commodities are just going to keep going up for years and years and years. And it's like, no. Especially if the economy is going to get hurt. Like all you need to do is a little study of history. And you will find that especially when the economy gets hit, commodities go down, right? And that's what I kept talking about over the summer when oil did that blow off top, right? And everybody was so bullish on oil, and all these people on CNBC would keep talking about oil and oil and oil, right? And it's like, it's not going to stay that way. At the end of the day, look what happened to the price of oil in the great financial crisis, right? You cannot be bearish on the economy over this next year or two and not be bearish on oil price. Bottom line, it's just like it doesn't make any sense whatsoever. Like, do a little study there and you kind of realize, oh shoot, like, yeah, this is going down. And that's great news for us, okay? You look at something like oat futures, right? I mean, it's come off this blow off top that it had a deal, just insane. Like that's ridiculous. That should never happen with a commodity. But it happened with something like oats. Now keep in mind, this is still elevated and there's still likely more to come down here in terms of oats. And don't be surprised if oats continue to get cheaper over this next year, essentially, and get more into the normal range. That's what happens with commodities. Every once in a while, they can go through some short-term super cycle, but it does end, and the fall is really, really dramatic nonetheless, right? And obviously, it's benefiting somebody like Oatley. Oatley, this stock is ridiculous. I pulled up a 1 month of Oatley. The stock is up over 90%. This is not retail driven. A lot of people want to know my opinion on this. It's not retail driven in terms of like retail getting involved with this. This is something else. I'm thinking it could be some sort of hedge fund, maybe adding quite a position here, because you look at the moves here, they're dramatic. I mean, the buying pressure is absolutely relentless in the stock over the past couple weeks here, essentially 2 to 3 weeks. it's been extraordinary to get that sort of move, right? And so it could be a hedge fund. It could be also, I was thinking maybe like a drink related company who's trying to add a major ownership position in Oatley. Maybe something like that to kind of diversify their way around it. It's very popular in the drink industry for a company to make a stake in another company, right? And with a company like Oatley, I mean, it wouldn't take a huge amount of money to potentially move that stock like this. Maybe $50 million to $150 million of buying pressure. Maybe for something like an Oatley pushes the stock price up like that. Just that's an extraordinary move, and it just hasn't shown any signs of relenting. And I just think it's very intriguing. Another 12% here today, right? Look at this. I think this is very important for everybody watching this right now, okay? This is my, what I call rich people stocks watch list, okay? And they basically consist of companies that, let's just say, rich people use, okay? So think about Wynn Resorts, think about LVMH, Louis Vuitton, think about RH Furniture, think about Ferrari. Those are the 4 stocks that are on this, right? Look at how those stocks are performed over the past 3 months. Wynn is up 43%. LVMH, Louis Vuitton's up 23%. RH is up almost 19%. Race is up 13%, right? It seems to me, and we'll see how those companies' earnings do over this next year, but it seems to me that Wall Street's basically saying, even if the economy gets worse, rich people are still going to have money and they'll still be willing to spend on Ferraris and Louis Vuitton and at the Wynn and buying RH furniture and things like that. Now, whether that's a false assumption or a true assumption, we'll have to see how that plays out in those companies' earnings. But it's basically what Wall Street's saying here in this situation, because those stocks are doing phenomenal over the past 3 months. Like that's great. That's literally great returns for a 3-month span. 13%, 19%, 23%, 43% in a 3-month span. That's great returns for those companies. So very intriguing to see how that's working out, right? Now, something I think is important here is, you go back to the great financial crisis. I think the market reaction as the great financial crisis kind of went on there was very intriguing, right? And this is going to cause very much confusion in the market, right? Because a lot of people are looking at the market and they're saying, okay, I think the economy is going to get worse over the next year, right? So that means if the economy gets worse, the stock market has to go down, right? Doesn't work like that. And I think it's very important for everybody watching this to understand it doesn't work like that. It never has worked like that. It would be great if you see the economy get worse and the stocks go down, right? And the economy is good, so stocks stay up. It doesn't work like that. The stock market's always in front of these things, essentially, okay? And you go back to the great financial crisis, right? And we had a very bad economy for the next 2 years. So the market bottoms in very early 2009. I can tell you, anybody that was paying attention, the economy was trashed for the next 2 years, essentially. It was bad. I got a job at the very end of 2018 at Quick Trip, right? And that was my first decent job, making, starting at $40,000 a year with obviously promotion opportunities, which I was able to, rise the ranks and whatnot, right? And you got to understand how ecstatic I was to get that job, making $40K a year starting, right? I was over the moon. That was incredible, right? And why was I so excited for that? Well, because a few years prior to that, I was started out making $7.50 an hour, right? And so, to get a job in an opportunity like that to make $40,000 with promotion opportunities was insane, because we didn't have a great economy at that time. There wasn't just all these jobs out there that you can make $50K, $70K, $100K a year. That didn't exist at that time, right? And that was the economy we're in. But meanwhile, the stocks, they were just going up and up and up, and it was a great time, right? But the stock market, it understood where the economy was going to go, and things did strengthen over time. And guess what? Corporate earnings started to come back at the end of 2009 into 2010 and continued to strengthen more and more and more. And it took some companies several years to get back to where they used to be as far as corporate earnings were in 2006, 2007, but they got there. And the stock market priced it in ahead of time, and the stock market many times is playing this game 6 to even up to 18, maybe even 24 months into the future. It constantly plays a game very much in the future that it won't make a lot of sense, because there's going to be certain things that go on that you're like, what? I'm seeing this in the real world, but yet these stocks are going up, or vice versa. You're like, I think the economy is great, but yet stocks are going down. And so a lot of times it's not going to make any sense, but it's been that way forever, and it's going to continue to be that way, okay? And this is why it's very important to have a long-term mindset. I cannot state this enough, because the fact is, No one has any conception or clue. We can all throw darts at a dartboard and try to say, I think the stock market already bottomed, or I think the stock market's going to bottom in 3 months. I think the stock market's going to bottom in 6 months. I think the stock market's going to bottom in the fourth quarter of 2023. Whatever, okay? The bottom line is, no one can predict that. I can't predict that as somebody that's been in the market for almost, 15 years now. I don't know anybody that can predict that. I know everybody can throw out an opinion and throw a dart at a dartboard and try to say, I think the stock market has already bottomed or will bottom. We don't know. Maybe the stock market already bottomed. Maybe it's going to bottom in 3 months. Maybe it's going to bottom in 6 months. We have no clue, okay? Maybe all these stocks have already bottomed. Maybe Tesla's already bottomed, right? Maybe all the small cap stocks have already bottomed. We don't know. And so you have to just look at this from a long-term perspective and understand you're buying these assets from a long-term perspective, right? And, if they bottom tomorrow or they already bottomed or they bottom in 3 months, 6 months, think about where these companies are going over the next 3, 5, 7 years, not over the next 3, 5, 7 months. That's the bottom line with that, because you're just going to fall into a trap of just like thinking and guessing and throwing darts at a dartboard and hoping you magically catch the bottom or something like that, right? And one of the things I definitely like about the new Patreon portfolio is just a consistent amount of money. I'm going to invest $150 every single week in that account, right? And I'm looking forward to that because I've never invested like that. I've always, invested kind of sporadically, where some months I won't buy any stocks. Other months I put tons of money in a stock, right? And it's going to be nice to just buy a consistent amount every single week, because it really is the strategy of taking it from a standpoint of, I don't know if the stock's bottom, I don't know if the market's bottom, but the bottom line is I'm going to consistently buy each and every week. And sometimes, the stock might go lower, and that's fine. But I'm going to continue to buy the dip in these different companies and build out a great portfolio of 10, 15, 20 stocks, right? And so having a long-term mindset is absolutely key in this game, guys, because no one's going to be able to predict exactly where the bottom is. The other thing that's absolutely key is having a growth mindset. And I don't really talk about this enough, right? A fixed mindset is something like, when it comes to skills, it's something you're born with, right? It's fixed. Whereas somebody else with a growth mindset looks at skills and they say, it can come from hard work. I can always improve, which absolutely is true, right? I remember in track, for instance, I did track for many years, and I'm not naturally the fastest person. I can tell you that, but I improved my craft immensely and got really fast through a lot of freaking hard work and understanding I need to do this workout and that workout. And I ended up actually becoming, getting really, really fast at running. And that's not something, sprinting, that was not something I was just blessed with. Oh my gosh, you can just run so fast. No, okay. No, my parents weren't fast. I didn't come from a great genetic background when it came to speed, but I trained myself to become very fast at running, and the mechanics of doing that and the hard work. And so that's the way somebody with a growth mindset looks at it. They say, okay, maybe I won't be able to be Usain Bolt. That's fine. But I'm going to be able to improve this and get into a pretty good place, right? Somebody with a fixed mindset looks at challenges as, something to avoid. They tend to give up really easily. If somebody has a growth mindset and they look at challenges as they should be embraced, it's an opportunity to grow, be more persistent. And that's, the way I always look at challenges. It's I'm always faced with a lot of challenges in life, and I've always have been for my whole life, right? And especially in the past 15 years of paying attention to the money game. And I've just learned challenges, you can't back down from them. You just got to accept them, and it's going to make you grow and become stronger. Every challenge that's put in front of you, and this is regardless if you have a religious belief or anything like that, a challenge that's put in front of you is your opportunity to grow and become a stronger person. A fixed mindset when it comes to effort, it's the minimal amount to get by, essentially, right? And somebody with a growth mindset looks at effort and it's essential. I've got to put in the most effort I possibly can to get as good as possible, as fast as possible at whatever thing this is, right? When it comes to feedback, obviously somebody with a fixed mindset cannot take it. You get very defensive, where somebody else can take feedback and try to get use out of that, right? And identify areas that they need to improve. And setbacks is a biggest thing, especially for investors, right? Setbacks, it's so easy when a stock doesn't work out for us to blame it on everything. Oh, this stock didn't work out because, it was the management team's fault. And maybe it was. But we can't just look at it from that perspective. Maybe we put way too much faith in the management team, right? Maybe we did. And I can definitely look at investments of mine in the past where the management team did a horrible job. But if you're going to take the credit when a stock does really great, you got to accept the defeat when the stock does bad, right? And that maybe you just put way too much faith in that stock. Maybe you put way too much money. And that's the way I always have to look at it, right? There's certain management teams that do way better. Tesla changed my life, right? Tesla stock was definitely a life-changing stock for me in terms of the amount of money I made. It changed everything forever, right? It took me from a guy that was doing well for himself to a guy that was, became the 1%, right? And why did that happen? It wasn't just because I was so smart and I saw everything. It's because Elon Musk and the management team did way better than I expected. They did way better. Their margins hit way better numbers, their profitability, their revenue, their amount of everything beat my expectations. They knocked out of the freaking ballpark. And so if I'm going to accept the success of that stock, I also have to accept the failure of when a company's management team does really bad as well, right? We can blame it on the Fed. Oh, the Fed, man, they're raising rates so aggressively. It's hurting the whole market. Wall Street's not buying. They're selling my stocks. We can blame it on short sellers, all these things, right? But the end thing, it's just best to take accountability for whatever, right? And I've made some blunders in my stock market career over the past 15 years in stocks I invest in. I'm like, oh my gosh, did that one go bad, right? And there's others that, just worked out so much better than I ever anticipated. And there's others that worked out exactly how I thought they were going to work out. And you're going to have a mix of that. And you just have to be able to learn from all those situations, whether it's an insane success. And that's part of the reason why being diversified in the market is so dang important. And that's why I always state that over and over again. And if you look at my portfolios, something you're going to see consistently, I own a great mixture of growth stocks, value stocks, and dividend stocks. It's always my thing. And there's going to be some stocks that I take some massive losses on. And just, wow, how did that go so bad? There's going to be other stocks that just do way better. And it's like, holy smokes, can you believe how much money we made on that stock, right? And there's going to be other ones that just do good. And I'm willing to accept that. And the diversity is absolutely key because I'm not too tied into just one stock about making or breaking my whole portfolio or something like that. Stocks can hurt me. Big investments can hurt me, but it doesn't take down the whole ship because one stock went down, right? The public account's a great example of that, right? Public account got hurt massively from the back half of 2021 into 2022. Horrible. But that account held up because it's diversified and it didn't get absolutely, wrecked to oblivion because it was essentially, it's a diversified portfolio, right, of many different stocks. And I think that's something important that we all have to kind of keep in mind. And a growth mindset is so key to this game, guys. I'm telling you, long-term mindset, growth mindset, absolutely so beneficial to long-term investors. It's not even funny, okay? So hope you guys enjoyed today's video. As always, if you want to support the channel and you enjoy the content and you enjoy learning and those sorts of things, consider joining us in the Patreon, which will be the pinned comment down there. And you also get to see the buys and sells in that new Patreon portfolio, which I just posted the buys I had on Friday in there. And also, obviously, this Friday, I'll be buying stocks in there, and I'll show what stocks I'm buying and the prices and all those sorts of things. So appreciate everybody joining me. As always, much love and have a great day.